What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, we're going to talk with Henrik. He is behind EMoney and he is complete fire, guys. He's going to explain to us about his protocol, what he's looking to do, how they're trying to disrupt the stablecoin market and bring on the masses in cryptocurrency. Henrik, tell us about your crypto project.
Hey, thanks for having me on your show. It's a pleasure to be here. We are EMoney. We are building asset-backed stablecoins. It's the boring kind where we have money in a bank and we deliver some audit reports to show the money is actually there. We have some novel features that include being interest bearing, which allows us to issue tokens based on European currencies, which has a very interesting interest environment. We're building on the Cosmos chain, the Cosmos SDK. So we're Cosmos chain, and we have recently joined the IBC Gang Club to connect to Osmosis on the hub, and we're looking to collaborate with other zones in the future. So it's fairly exciting times right now. We are essentially right now growing our stablecoin issuance as much as we can. Yeah.
Okay. So, with the stablecoin issuance, how does that work exactly? Are you just able to issue your own stablecoins just like out of the blue?
No, we make sure to have them backed by money in a bank account. So what we've been doing is to find a way to be to have a compliant process for this, where we can issue the stablecoins and we won't get shut down by regulators and things like that. And then we put some money in a bank account to back the tokens and make sure that we have on and off ramps where people can either get out to other crypto or redeem the tokens against euro or one of the other currencies. Right now, our focus is mostly on euro, but we actually do support Swiss franc and Scandinavian currencies as well.
Okay, so you're working with regulators, and how would that work if the token itself? Well, actually, let's go into the issuance model. So when you issue the token, is there like a limited amount, or is it just like a one to one? Like if you give $1, you get one USD or one EUSD, or how does that work?
We don't have a US dollar at the moment.
Oh, I'm sorry, E
It's
euro. So a
yes,
euro for the
exactly.
euro.
No, it's fine. It's also unusual. It seems most stable coins focus on a dollar. What we focus on right now is a euro. So what we our model is actually has a what we call a dynamic peg, which means that one token is not equal to one unit of the underlying currency. This allows us to implement an interest bearing model. So our stable coins are actually more a kind. They're more similar to a bank account than cash in many ways, because it's interest bearing. So that provides some fairly interesting opportunities. It's also something that has proven slightly hard to communicate in the cryptocurrency community. Somehow
Okay.
people see it as a kind of a blasphemy if you dare assume that a stablecoin is not one to one, but it actually opens up some pretty interesting opportunities for the issuance.
It's interesting. So how does the reserve work? I've read that you have separate pools. So like in the euro pool, if you deposit €1, it has well, if you deposit €1, it has one euro that can always be redeemed at any time. But like you wouldn't mix like a peso or any other currency that you have with the euros. You have separate pools for them. Am I understanding that correct, or is it just
That
like a
is
complete reserve?
that's correct. We have bank accounts for each currency. So at the moment we have 5 bank accounts with different currencies. So it's the management of the reserve assets is super boring in a way. Like we have cash in a bank account, and once that reaches a certain limit and we have an idea of what the traffic is going in and out of the stablecoin and what we need to have readily available to either issue or redeem more stuff, we'll start entering short-term bonds in the same currency, government bonds, just to keep the assets safe.
Okay.
So It's like the world's most boring management of the money in a bank account.
Okay, so who secures that? Like, who has access to that bank account? Is it one person, or is it similar to like a multi-sig, or who
It's
says what?
I mean we have a legal entity that controls the bank account. I mean, in that way, it's traditional asset-backed stablecoin, right? There is a legal entity somewhere holding some funds, and as long as people trust that legal entity to behave, the tokens have a value. It's the model that is known from basically Tether, USDC, etc.
Okay. So, there's been a lot of FUD around USDT, USDC, just kind of like the centralization. I'm sure you heard about the Poly network hack, where Circle as well as Tether, they actually froze the funds, which is that's good. They froze it like to keep the hacker from taking it. That's great, but the problem is now you're like, wait, how can you have centralized stablecoins in DeFi if someone can stop the stablecoin? Does that does that make sense?
Yeah. I saw that, and I wondered about the same thing where the CTO of Tether was out 20 minutes later saying, "Oh, I stopped this." Yeah, I mean, I guess this is because there's basically ERC20 tokens, and then in the contract they created for this, they made sure to have some blacklist transfer functionality. Like we don't currently have this functionality on the chain. Also, another issue is that we live in the Cosmos ecosystem where a lot of chains completely independent of each other communicate and send assets through IPC. So if some of our stablecoin tokens were somehow involved in a similar hack on another chain, we wouldn't be able to reach out to that chain and freeze those assets. That would be impossible for us. So you could say we don't have that option at the moment.
Okay,
Of
that
course,
makes sense. That
a
makes
hacker
sense.
would, if the hacker got in touch with us to do an OTC deal about redeeming the tokens, we would probably say no, please. But no, we don't have a way to freeze assets like that in a multi-chain ecosystem like the one we're operating in.
So I know Poly Network was similar to, it had something to do with bridging. So what if well, I'm not sure if you know or not, but the USDT and the USDC that was bridged onto another network, were those affected too? Because if
I
they
have
went
no
on to
clue, honestly. I don't know enough about the hack or Poly Network to give that assessment.
okay. So I mean, I guess the concern is that at least if it's on a different chain, if you take it off the EMoney chain, at least you won't have that concern. However, a concern that has come across, some of our members have asked, is if it's if you're going to have a coin that's centralized, what if the European government, they kind of say, hey, you need to stop doing what you're doing? What would happen to e-money being used across all chains if the whole thing just shut down?
Yeah, I mean that having a centralized stablecoin like this has advantages and disadvantages.
Okay.
And of course, a disadvantage would be if they did something like that overnight. I mean, I'm presuming they would have some kind of grace period where we're allowed to shut stuff down in an orderly manner and give back the funds and let people redeem their tokens. I doubt they would just say like shut down now and keep the money. That would be surprising. There would probably be some way to reimburse the token holders. Yeah, I mean, what we've spent quite a lot of effort and quite a lot of money essentially on making sure that we are compliant with the regulation that is in the EU. So we don't see that happening in the near future, at least. So it's fairly important for us to not go too close to these borders.
Okay.
To ensure exactly like that we don't suddenly end up in a scenario like you say where we are told what you're doing is super illegal, go away, stop it immediately. That would destroy a lot of effort and time spent for us. So we spent considerable effort and time to make sure that won't happen.
Okay, that makes sense. That makes sense. Okay, so back to the yield bearing. You mentioned it is a yield bearing asset. So I know in Europe and several countries, they do have negative interest rates. So what would be the incentive for someone holding a coin that's basically guaranteed to go down? And obviously, it's the same thing with the dollar. They're printing it like crazy. So it is obviously going down in value anyways. But why would someone be incentivized for going for a negative interest rate instead of using something like USDC or USDT if they're going to go the centralized route?
I mean, it's essentially it's a decent store of value. Like right now, we're talking about having maybe minus 1.5% over an entire year applied continuously. Okay. So if you enter our stable coins for maybe a week or something, you will not feel any kind of value loss. It has to be put into perspective in that way. Like if you trade in most AMMs or pools around the ecosystem, you'll easily pay a fee of 0.5% already there for just one trade. So it needs to be put into perspective that it's a relatively small price to pay. And then, of course, we all hope that one day the economy will be going back to normal and that we might have positive interest rates in banks again. When that happens one day, then this interest rate will also be sent to the users, right? So that's hence what I'm saying, that it's more akin to a bank account than cash, okay. Essentially.
So I read in the white papers that a portion of the like since it's a negative interest rate, that actually goes to the accrual of the NGM token, so to the burn, burning the tokens. Hence the accrual in value. Yes, you do have, I believe it's 10% inflation every year for NGM.
Yes, for the staking token, that's 10% annually. Yes.
Okay, so the 10% is already built in there. So to my understanding is the more growth you have or the quicker growth you have, the quicker it will be to burn the NGM token because it's a portion of the stable coins that are produced. So what would happen to the point where you have so much growth that there can be no more growth? What would happen to? We're just talking like way in the future because obviously I like we need to bring a bunch of people in.
That's a very nice scenario to think through. I mean, essentially, like once we had designed the interest bearing model to make this possible, to even do this for the euro at all, then we switched into this old banking business model where the bank gets a certain interest rate with the national bank, and then they provide a little less interest to the end customer, and then that's the margin. So we did that to add a 0.5% margin, which is used to buy back and burn NGM, as you say. And essentially what happens there is that the bigger our issuance is, the bigger this buyback effect will be on the NGM token. So it should scale with issuance how powerful this buyback effect is.
That makes sense. Okay.
And so I mean, it's interesting to say that the NGM token derives its value from the amount of issued tokens, not so much the other way around. It's our stablecoins are not based on the NGM token in any way. Its value is derived from money kept in a bank account, while the NGM token is then has a buy pressure that is that scales with the issuance.
That makes sense. Okay. So I guess another question would be, what's your adoption rate right now? Is it pretty rapid? Is it slow? Or
we've actually seen some pretty interesting growth. I mean, we got IBC enabled, I don't know, 3-4 weeks ago, and I think in that time we've quadrupled our euro issuance. So I mean, it's still small numbers compared to, well, basically most other known stablecoins, but it's I think we are up to 4 million euro now. So if we can keep some of that pace, that could be very interesting in a few months' time or a year.
So to issue a new euro or a new coin, there's no way to swap from like USDC to USDT. Well, obviously it's on Cosmos, so I guess you can't do that. But I guess well, actually, you can on Sif chain, but if you're adding more euros, is that only going to be with actual money that's outside of cryptocurrency? Like, is that the only way to issue new euros?
No, I mean what we're doing now is we're building on and off ramps, and the first effective one we have is the Atom e-euro pair on osmosis. So
Yeah, I
essentially
saw
what
that.
we're doing on that, we are market making on that, ensuring that we're tracking the Atom price in euro. And whenever we get enough euros out of that market making, we will take them out of circulation, sell them on Kraken, issue new euros, essentially. So that's a kind of an on-off ramp. Another approach to buying the stablecoins, which a few people have done, is to do an OTC trade deal, which I mean, it needs to be a certain size to make it worth the effort of all the KYC and AML process we have to go through. But people have been doing that using USDC directly with us.
Okay. So what are all the stable coins that you have currently?
It's the euro, it's the Swiss franc, and it's the Danish, Swedish, and Norwegian kroner. It's because we're located in Denmark, and we had an opportunity to get the three Scandinavian currencies as well as accounts, and we thought it would be fun to also have those in the portfolio. But to be honest, I don't see them as any of our big sellers in the near future. I don't see a big demand for those.
Yeah. Yeah. So you aren't really specifically going for a certain market, or you are going for like, are you looking to expand worldwide, or what are your goals?
Yeah, I mean, right now people are focusing a lot on the fact that this is mostly a euro stablecoin, which it is, um, rather than a US dollar stablecoin. And to some people, that's apparently incredibly exotic for some reason. And they're like, "Oh, are you targeting Europeans? Are you targeting what you target?" But I mean, with the markets we're reaching out for now, it essentially doesn't matter that much whether you're going into a euro or USD. It's a stable store of value on a reliable stable coin. I mean, that's what's important in this context, I would say. So whether you're migrating whether you're taking refuge from the next dip in a USD or euro, it doesn't matter. It's a stable store of value. Down the road, once blockchain reaches more mainstream adoption and things like that, then of course it will start to matter. Like once you can pay in stores with tokens, it starts to matter whether it's a euro or US dollar. But I would say that a lot of the crypto community should think less about that, whether it's a US dollar or euro. It at this stage it doesn't really make a big difference. It's just stable value.
Yeah, I know that's what Cello Blockchain is doing as well. They also have their own CUSD, C Euro. They're working on stable coins as well. They have a little bit different model than yours. Instead of having like euro to euro, it's actually just like a whole entire reserve of different crypto assets. So it's not actually fiat backed. So it's not really a centralized type of model. It's more so crypto backed type of thing, if that
Yeah.
makes sense. And most of the reserve is in the Cello coin, like the Seagold coin.
Yeah, I mean there are so many models. It's a fascinating subject essentially. Like on some level, we have reached for the most boring and version, right, where we just represent money in a bank account on chain.
Right.
Um, while some of the more decentralized ones are quite fascinating, and we all it's very interesting to see how many of them can survive in the long run, things like that.
That's true. That's true. So, is there actually real world adoption of this? Like, or is it just kind of bringing crypto assets into the market? Like a good example of this is Terra Luna. They're, I'm sure you've heard about Terra.
Mm.
It's on the Cosmos blockchain as well. But they have a I guess you can call it company. It's called Chai Payments. And the Chai Payments app actually allows like retail consumers and whatnot to actually buy goods and services through this app directly. So it's similar to like a PayPal or Venmo or even like what is that called? Not WhatsApp. It's the ones they use in China, WeChat and Alipay. So it's similar to something like that, but it actually has like a real world adoption if you understand what I'm meaning. Like you can actually buy goods and services with that. Are you guys looking at doing something like that, or what are you guys specifically trying to do?
I mean, that would be incredible. I mean, we have planned for a future where we could use this for real world payments. Our blockchain, we did some modifications to the SDK. So our blockchain has dynamic block time. What this means is that if there are no transactions in the blockchain, it will generate a block every minute just to do the minting and the staking stuff. But as soon as there is a transaction, it will finalize the block with that transaction as quickly as possible. So what this the effect this has is that it provides us with very quick finality. Your transaction is gets in a block incredibly quick, and like usually it's around half a second. So that's actually a timing that is comparable to, for example, credit cards or something. So you could envision a future where you have people using an app with the EMoney blockchain as backend and paying in stores and stuff like that, and having a decent user experience with that. We don't have any like real world integrations like that at the moment. Denmark is a fairly bad country to do this in, because our payment infrastructure, like that the banks have created, is already really good. We have a very solid penetration of credit card payments and free instant payments across banks and all this stuff. So it's a tough market to bring a real world payment solution in. Our strategy right now is to gain a solid foothold in more traditional crypto.
Okay.
And increase our issuance in that.
That makes sense. And I noticed compared to like other not euro backed, but I guess you can say euro stable coins, I noticed that it does trade a little bit lower than what the traditional euro is, like maybe about 6 or 7 cents. Is that due to the fact of the negative interest?
I don't know where it would trade lower. Actually, it's like the one place right now where we're keeping the like where we're market making to ensure value is that one pair on osmosis. So
Okay.
it hasn't really hit the euro.
That could
Token
be
has not
why.
really hit the market yet.
That's true.
Depending on, I think it's still early days also for market making on osmosis, as far as I can tell.
That's true. That's true. So I guess it's
So
just a matter of time as more exchanges come out and so on. That makes sense. Okay. Okay. So I guess another thing is what differentiates your project from something like Cello or Terra? Like what market are you trying to grab? Like what are you trying to do that brings something different to the table?
I mean, this is our version of creating a trusted stablecoin that respects the current regulation and is slightly, yeah. I mean, I've said it before. It's slightly boring, right? It's just money in a bank. Where stuff like algorithmic stablecoins are super fascinating. They can also be very volatile. Sometimes things can move very quickly with them. What we want to do is also create a stablecoin where perhaps corporates would adopt it and feel secure in doing that. Where if you find a corporation that would like to use blockchain payments, they might be a bit disinclined to go into something that is backed by other crypto. Quickly it gets to be sort of turtles all the way down. It can be difficult to understand where the value actually comes from and model the stress scenarios and find out what happens if we suddenly enter a dip while I'm holding 10 million of these. Will I be able to get out of it intact, or things like that? Our model is far easier to understand in that way, and I think it is something that some parties like, that some of the not native blockchain corporations could prefer.
I can agree to that. A lot of them actually like KYC and they welcome it. They want to bring it to like Aave and whatnot. So no, I can definitely agree with that. So I guess in general, do you have any partners or do you have any VC investors or VC backing? Just kind of like people like, hey, look, I'm all in type of thing.
We did a private early seed sale and a private sale last year that financed us. It's nothing. It hasn't been like huge amounts we raked in. Our NGM token is listed on a few exchanges now and can be bought there. No, we don't have a huge VC investment in general. What we've discovered is that I mean, this kind of activity looks a bit boring to some of these investors, and some of them feel it's too close to being regulated, that they're afraid to go near it essentially. So we had some people who were looking into maybe funding us and could benefit from having a stablecoin, but then they pulled away once they looked into all the hairy regulatory stuff and said, maybe we don't have the nerves for this. We prefer to go in something completely decentralized. It's a shame, I think, because like having a good variety of stablecoins and solid stablecoins, I think it's important for a lot of ecosystems. You could say, okay, we already have USDC, we have Tether and all those, but I think also having variety is having is a little bit important. But yeah.
That makes sense. That makes sense. So I guess with your project itself, um, why I guess why did you come up with it? Did you just want to kind of create a multi-chain cryptocurrency or a stablecoin, or what was your thoughts when you were coming up with this?
Well, one thought was that if we went and did all the hairy regulatory stuff, it would not be too easy to replicate it. It's if we went out and created something, like both me and my co-founder Martin, we're developers, we're software engineers. So it's essentially what we like is doing software development. But we also figured if we do a project that is pure software, essentially, it's and we succeed with that, it could be too easy to replicate it. While when we go out, we spend time convincing banks to take us on as customers. We convince EY to take us on and do the auditing of our reserves, and we navigate we do all the regulatory exploration to find out how to do this without getting shut down or going to jail. All of this is far more hard to replicate, and it's actually a lot of it is not very fun to replicate either. So it was a little bit to get a competitive advantage.
That makes sense.
In that way.
Okay. So is what I guess last thing is what are those steps that you have to take in order to go through regulation? Is it just like, hey, this is what we have on reserves? You go through yearly audits, or what are the steps involved? Like why do people when they hear decentralized or centralized stablecoin, they kind of like, oh, SEC, and kind of get scared? Is
I
it
mean,
vigorous?
no, I mean actually, I think there's a huge difference between the regulatory environment in Europe and the US. We've had a really good conversation with the European regulators. They've been very approachable, willing to take a dialogue. We've explained to them what we wanted to do and what the obstacles were. For example, how their crap currency was not able to keep a positive interest, stuff like that.
Yeah.
And then they helped us navigate that. So I mean, it's been a they've been approachable about it, and we feel we're in a place now where we don't risk getting shut down anytime soon. So that's really it was worth it.
Okay. All right. And are there anything in particular, or anything special that we should know about your protocol, and that I guess you can leave us with?
I mean, what we're doing now is we are essentially we're bridging and we're building liquidity. So we'll be connecting to more Cosmos zones now. We're in talks with some of the other ones. and we'll also be connecting to other networks. Like we have I think people who followed the project will know how we've spoken a long time about bridges to Avalanche and Elastos and Algorand, and now that the IBC connections are working and up and running, we'll be also switching our efforts to that, in addition to finding ways to expand liquidity on those platforms as well. So yeah, I mean, what we also want to do is really work with projects on having them expand liquidity. So what we've seen is some projects buying a lot of stablecoins in order to add them to pools on Osmosis, for example, just to have that pair up and running.
Yeah, I saw you got the Osmo rewards going. Are you going to be adding NGM rewards over there? Or just
we have actually been adding that since basically day one.
Oh, so they are there now.
They are on a few pools. Unfortunately, the Osmosis UI is not great at showing that, but there have actually been some fairly juicy rewards.
Yeah, because I was looking at it and it has you at like, let's see, it has you at like 50% right now.
But that's an Osmo reward, so APR. I mean, that's the issue right now. As far as I understand, it's not calculating API for any other assets than Osmo. I could be wrong though. It's changing rapidly. Yeah, but there are actually rewards. There are actually rewards in some of the pools.
Will they be airdropped, or were just curious?
The rewards are distributed the same way the Osmo rewards are, through osmosis gauges.
Ah, okay.
So
okay.
I mean, essentially, if you add liquidity to the pools and lock the tokens for 1, 7, or 14 days, then you get them delivered the same way that the Osmo token rewards are delivered.
Yeah, because I see it here. It does only show the Osmo rewards. I actually pooled in one of them. I didn't notice any of the NGM rewards yet, so maybe it's just a UI glitch. Not sure.
Okay, I would assume your account should show them, but we should look into that, I guess.
Yeah, it's probably just a UI glitch. But where can we learn more about you?
You can go to our website at emoney.com or go to our Telegram channel and ask questions, or reach out if you have any interesting propositions or suggestions.
Okay, fantastic. All right. Well, hey, I appreciate you jumping on the channel, especially with taking the time to talk about your protocol. Really interesting subject, really interesting topic. We're kind of diving deep into stablecoins right now. Stablecoins, they're definitely going to be pretty big on disruption because, well, it's one of the easiest places for people to get in is they start with stablecoins, they start farming, and then they're like, maybe I should buy some Bitcoin, Ethereum, kind of play around a bit. But I always close all videos and all episodes with a wisdom one-liner. It's just like a verse from a book in Proverbs. Just going to close it out with Proverbs chapter 17, verses 17. A friend loves at all times, and a brother is born for a time of adversity. Best thing to keep in mind, man. A friend loves at all times. Are you that friend?
Maybe. I need to think about that. It's a nice proverb. I haven't heard it.
Hey, I appreciate you jumping on.
Thank you for having me on.
No, honored to have you. Look forward to seeing what you guys come up with and seeing your growth.
Thank you. Thank you.
Thank you.
Bye.
Bye. Y'all guys can also catch me on tweeters. It's at rent a home fast, like literally at rent a home fast.